Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, October the 5th. The year's 2021. Let's talk trading. Trading is work. As you know by now, these videos are for educational purposes only. Your results may differ from mine. I think sometimes we forget that trading is work. Some people go into it thinking they're going to get rich, and some people think that, maybe they can make a living. Maybe they can make some, extra folded monies, play money, invest for the future, hit the lotto. Lots of different reasons. But the bottom line is if you're doing this day in and day out, it's work. Even if you only look at the chart, you're one of those traders, you look at the chart in the morning and you look at the chart at night and you make your trading decisions and place your trades. It's still work. You have to do the work. And part of doing the work is doing the analyzing, the money management, the risk management. You work on your trading plan, make sure everything's keep track of what's going on, the statistics, your P&L. There's just so many things, and it's work. And the one thing that we've learned about work, we being, the human race over the centuries, maybe in this past century and the current century, is that after you work for a while, you start to fatigue. I mean, when we trade, it's not too physical. We're probably sitting in a chair or laying in bed or something. Maybe somebody has a stand-up work desk. That's how they trade. But for the most part, it's sedentary. But on the other hand, our gray matter, our brains, probably going full tilt. I bet you'd be interested to hook up a bunch of monitors, see your brain activity, see your heart rate, see your breathing rate, and things like that when a trader's in a trade. I think that'd be very interesting to check out. But the thing is, yesterday I talked about trading as continuous, but if you continuously trade, you're going to fatigue, and then you might start making bad decisions or unprofitable decisions, let's say, or you might deviate from your plan. You might hesitate. You might be over anxious. So many things that you might do because you're fatigued. So it just might be a good idea. Put a trade on. You're in the trade for a while. Maybe you take a 5-minute break. Because even if you miss a trade, guess what? Another one will come along. And so don't let that FOMO, that fear of missing out, keep you glued to your seat and your eyes glued to the screen because you're afraid you're going to miss a trade. Trades come and go, and you'll get another one, guaranteed. Unless you've got some esoteric system that only generates a signal, once every blue moon or something like that. So let's take a look at the charts and see what we've got going here. Okay. On the monthly, we are 168 pips above the open for the pound dollar. And we're 8 pips off the high, 206 pips off the monthly low. For the week, 90 pips above the open, 8 pips off the high, and 108 off the low. So that's pretty much, well, almost the same, because we are starting out this week here, and we just had one day last week. So, but that one day was a doozy. And for those of you tuning in, all the weekly open gaps have filled. Now, we are still in the trading range, opening range of the day and the opening range of the year. You see there's overlap here. We're above the opening range for the month, 64 pips above it to be exact. And we are only 3 pips below the yearly open. So we made up a lot of ground here, a lot. in the past, what, 3 days? Now 2 pips below the yearly open. We are inside the monthly inside bar and the weekly inside bar. Monthly inside bar was 2 months ago and weekly was 6 weeks ago. And you see there's some inside bar action, not that much. A lot of it's on the pound pairs here on the monthly. Looking at the daily chart, we can see there's only 5 pairs over 100 pips. Pound clocking in at 64 pips at the moment. And we're right at the previous day's high. Looking to bust out, maybe get some more of that range. And you can see here, we've crisscrossed the daily open. And we're well above the weekly open. So you can see here, we missed the pivot yesterday. We took out the pivot today. We are in the upper rat zone. You can see the red rat zone. The smart rat is only about 7 pips in distance. Whereas the smart green rat, we've got a range of about 12, 13 pips. So you can see how the high minus close and close minus low have narrowed over time. And that's why I created the smart rat, so we could have a little bit better triggers and know where these zones are. Pivot trading plan. Oh, while I'm thinking about it, there was a trader that sent a donation, and I know I sent out all the indicators. So if you sent me a donation and you haven't received your indicators, make sure you check your spam folder, because I think what happens is a new email address comes in, it's got a bunch of attachments, so they just throw it in the spam folder. Okay, he says price near pivot point bias is long. That one paid off today. Near R1 bias is short, and we're slowly approaching that R1 level. On the daily, let's see, something doesn't look quite right there. Okay, we took out the pivot, missed yesterday, so we still have these 2 open pivots here. Actually, we've got 3 open pivots from this year. We've got this one up here. We've got this one, and we've got this one. And we are playing with the upper wick zone right there, previous day's high, right around 40. Struggling to break that high. We'll see what happens. Coming up to the top of the hour here in about 12 minutes. So maybe the next hour will push through. I think the traders might be back from lunch. The New York traders, that is. Okay, looking at the DSR scalper chart, along with the highest low and lowest high. We can see that these the semaphore range is only 9.4, so we're definitely range bound at the moment. And a lot of times, if you can see this, you can take advantage of it. You can pick it for maybe get 4 to 6 pips between the 2 ranges here. And your timing's pretty much dead on. I mean, there's an opportunity, 1, 2, 3, 4. Of course, yeah, it looks easy in hindsight, but you just have to trade it and give it give it a chance each time. You had a 3-ball, you had it break the lowest or the highest low here once, pulled back, gave you a second opportunity, which would have paid off. Once again, on these trades, I'm usually just looking to make a couple of pips or more each time. You know, if I see that 1 ball appear, I'm punching out. I'm just not going to take the chance that it turns around. I might leave pips on the table, but it doesn't matter. I got some. Looking at the Walmart lines here, this hour, as you can see, it's been testing the 40 line. And you know I like to call the 40 the launch pad, but these launches have not taken off. These launches have basically failed in the sense that they didn't reach, you know, somewhere between 50 and 60, because that's what happens a lot of the time. But, you know, you can read the chart here. You can see we just don't have those pushes. It's really ranging in this area. So, I mean, I think the trend line drawers would say, well, you see that there, and you see this here. It broke that trend from, say, from here to there. So now we're below the trend line. So if that's the way you like to analyze charts, there you have it. Okay, looking at the rat zone combined with the wick zone, you can see once again we're stuck in this range right here. And this hour is almost over, about 9 minutes left now. We only have an 11 pip range, so I would look to play the breakout of the high low of this hour on the next hour, because especially looking to break to the upside. Because once again, with the only a 64 pip range here, we're only in the 19th percentile. So I would think range should probably get closer to, say, maybe 75, 80, somewhere there. Oh, and I think I had mentioned something. And actually, we might even be able to do a holo trade here. We're right at the highest open. So we'll have to wait and see. And last hour, put in the daily high. And the daily low was put in 15 hours ago. I had alluded to something. Let's see. On this particular chart, let me change HL5 here to the my period. We're going to change that to current. And then we're going to switch over to a daily chart. Now, once again, I've been toying with the cryptos, and this is one of the things that I've been looking at. So, for example, here, we had this lowest high 3 days ago. So just taking this trade here, you see, you could call it hairy hindsight, but you can just look at all these charts and you can see where you have this the highest low, and then you take that chart you take that trade to the downside, and here, yeah, it did go all the way up to 3,900. But you know, if you just put on a mini lot or something, or 0.01, you know, a micro lot, you can pick up some pips here, especially those traders that can't trade every day or all day long because they have a job. So, fellow traders, I hope that helps, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.